Here we have a fair value gap there. And now we have this inversion fair value gap. So you want to study, does this fair value gap get taken to the upside? If it does, if it comes back down and touches it again, we can treat that as an inversion fair value gap like it did here. There, then sent it higher. So this gap in here, study that to see if it acts as an inversion fair value gap, or does it respect it here to drop back down into that gap again? You're not trying to be right. You're trying to recognize a pattern that makes sense, because there's all kinds of ways to trade. You can be a perpetual bull like I was when I first started, or you can be someone that's going to be flexible, that you can say, I can be a buyer and a seller. But you also don't know what you're comfortable with. You don't know if you're trying to capture a continuation trade. You don't know if you're trying to capture a reversal. And I'm trying not to push that on you. Because if I push that on you, that means I'm pushing you into a mold. And it's going to cause you to take a whole lot more time trying to live up to that mold versus you organically trying to learn how to read price on your own. Watch the wick right here. Watch to see if it can touch that. Does it react off that and drop right into here? We have two gaps in here. We have this one, which is trading up into here, and then we have this one here. This is a normal fair value gap, bearish fair value gap. This is an inversion fair value gap where it's gone below it. Now, let me draw it out. See it? And then we have inside that one, we have this small one there, which is just a standard bearish fair value gap. Excuse me. And if you look right here, I was taking your attention to this wick. Trading up into that, we want to see, does it have an ability to trade down into this old gap here? Okay, so you would screenshot that right there. So what we had is inversion fair value gap here, and then a bearish fair value gap. That is a very, very nice model when you have a directional bias that leads to that directional run. We have a bearish order block, that candle here, because it had the highest up close versus this one. Don't look at this and think that that's the bearish order block. It's this one. It's inside of the fair value gap here, and it also traded into the inversion fair value gap there. The key is watching this wick trade up into it here. If it's bearish, what would it do? More specifically, what would it not do? It would not touch the midpoint of that gap or wick, which is what we have right here. See that? Trades up, but doesn't touch the midpoint. So is that weak or strong? Weak. So next candle, you can open. If it trades up, volume imbalance, that could be an entry to here. See that? So all these little observations, this is what you're doing while you're watching price. You probably have been, if you're the other people, that it's not my son I'm referring to now, other students or casual viewers or people that listen to say, you know, it's tape read. What is tape reading? This is tape reading. These are the things that you do while you're watching price.